Hello again, everybody. It is Wes with Pikes Peak Trades, and we've got our weekend video for trading that has ended the week of July 11 to 15, 2022. And as usual, I want to start with some of the big picture charts because we're looking at the significance of where we're at in the markets in relation to trying to determine if we can seal in a significant primary degree low or cycle degree in some cases across the board, or if the best that we're going to be able to do is just some continued bear market bouncing. So we're looking at the SPX monthly, and we do have a close here mid-month above that key 34 EMA, and that's really kind of our marker for the rest of the month. We don't want to see July close below about 38.40 is probably where that could be. It might, if we sell off, it's going to drop a little bit more, but then you're kind of guaranteed to be below it. And above that, we then look to the next set, which is right where that potential bearish X wave is, and that's going to be about 40.62 up above 4,100. So far on the monthly, things are looking okay. We get into that weekly, and it's an interesting candle. So this could be interpreted as a hammer candle, which would be what the bulls want for this white count. Now, it's also possible to interpret that as a bearish hanging man. Now, normally hanging man candles would occur at the top of an uptrend, but in a downtrending market, you can view that candle as just kind of straining against the downtrend. And you can see the last 3 weeks, we have had a progression of lower highs and lower lows. So again, we are on the alert, and in this bear market, we cannot say that this week resolved anything. I have it marked as a minor too low, but in order for that to be the case, we've got to have a massive move. Really, we've got to get back above this gold pivot, which is right in some of those monthly EMAs, strongly back into the 4,000s. These bearish fibs have to break on any bounce. And so while there were lots of opportunities this week to actively trade, and it was a fun week, especially the second half of the week in regards to that, as far as me being able to say that we resolved anything, we certainly haven't. Because look, the SPX still well below all of these moving averages. So we can start drilling down into some of the small time frames. We get into the daily chart here. It was a really nice last 2 days and a really good bar. So this bull's in control from start to finish with that close above the 21 EMA and closing on the high today. That does open up the next one, which is up there at about 3,900. So I'm certainly going to present the short-term count that's going to get there. And then you'll notice that we do have the potential of 3 waves down. So we've got the potential of a wave up, 3 waves down. That's why I've got that as an X wave or a minor 2. And so regardless of what we do in the short term, there are 2 counts that point to breaking the January 28 high on SPX, and we'll take a look at those details now when we get into that small time frame. So into the small time frames, with this close right here, I'm going to offer the possibility that we certainly could have this minute 1 extending. Now, with the extension of that, the likely count is that we had a triangle that formed here. So that wave 4 actually completed here, and then this can extend. This 5th wave can extend as far as it wants, and an ideal target is that gap fill at 3,900 that corresponds with the next moving average on the daily. Now, thankfully, we've got some really good structure here to trade against. So if we see a gap down on Monday that loses this white diagonal, say about 38.55, we want to get short, because I also leave in the possibility here that this wave 4 is actually an expanded flat. And I'm going to talk about how that's a valid count, because IWM, unlike the Qs and SPX, SPY, did not make a higher high into the close. So I'm going to leave it as this blue possibility that we could see 3 down, 3 up, and then a quick 5 down to start the week, but that would hold these fibs. Now, if minute 1 is topped, obviously we're going deeper, and that's going to target a gap fill from today. So that's going to be there. If we see continued weakness into the middle of the week, of course, we have that possibility that this could extend all the way up, and then we're looking for that higher low. So really, I think we're looking at about 38.55 as the level. If Monday's flat but holds that on any weakness, if Monday gaps up, then certainly that's extension in wave one. To me, there's just too many short-term variables that made it not worth keeping anything over the weekend. Obviously, I was stopped out here on that big candle. I thought we would get maybe some early indication on the close that we were going down into 402. That didn't happen. So I'm flat going into the weekend, and we're just going to have to see what happens Monday pre-market. Now, I haven't really talked about the bearish red. I'm going to offer that as the lowest probability count right now, although every major ETF did extend into a bearish fib zone. It's going to take a massive gap down with a massive sell. We would have to lose on the S&P this bullish fib zone, and only really below that zone am I going to entertain an increased probability of the bearish count. For now, it is looking like an impulsive wave up after a corrective 3 down, following before that an impulsive wave up. So I am giving those bullish counts the higher probability here. Let's keep marching through our indices, and we want to look at the Qs on a weekly time frame. There's that same candle. So is that a hanging man? Is that an actual hammer? Definitely an inside week, and that was true across the board. So we're just going to have to wait and see what Monday shows. We get into the daily. We got a pretty healthy look. 2 really good days again, right up into some resistance. So the Qs facing some more immediate resistance than the S&P. If we do get a bullish look Monday, I would look for that 50 SMA. That's just below 294 to help top out that move. If we're really bullish, we're going to be looking for an upper BB hit, which is all the way up about 298. I think that's a little bit too much to ask for. So we get into the short time frames here, and you're going to see again that diagonal close. I offer the same potential expanded flat 4. Also want to point this out. Notice that would alternate really nicely with a sharp zigzag 2. So if from the morning high we're 3 down, this is a choppy move, we're 3 up, there's your expansion, and then we do a quick 5 waves down, but say it holds that key 289 pivot, then that's going to be wave 4, and we're looking for wave 5 to finish this first impulse up off of the weekly low that was set after Thursday's gap down. Okay, now of course we have the possibility that wave 1 can extend just like SPX. That would again target a gap fill. So that gap fill here is between 295 and 296. Also a pretty key intermediate term pivot. I think that would be the topping place. We've got that really nice structure. So that nice structure there of that white diagonal, that's going to be our frame of reference for any short-term trades on Monday. Let's keep moving through our indices. So I want to look at IWM. And unlike SPX, it has not recovered any monthly MAs. It made a spike up through about 177 this week, but was quickly rejected and still closing below. So small caps, although relatively stronger today, along with growth stocks, they've really got to get back out in front. You can see possibly a key pivot recapture. That's right at the closing level at 173, still below all weekly EMAs. Is this potentially just a bear flag? Absolutely, because notice that this as a triple zigzag, this could just be an A, B, C down into that next yearly low. So we have to leave that on the table because we just haven't forcefully recaptured much bullishly. We get into here the daily, a nice hammer candle. We'll talk about some short-term possibilities that closed right at daily EMA resistance. Like SPX and QQQ, if we're going up in white bull, it's going to be big. So this is the one here that would be leading towards big extension in the others. This is actually within a 3 of 3. So we're going to have to see small caps get back out in front, because you're going to notice that progression, June 28, July 8, and then today. That's just all a series of lower highs. Into the small time frames on IWM, what would we be looking at? The potential of a 1-2. That would certainly match what I showed you, QQQ and SPY. This did not get above the high. So it's possible those expanded flats happen and we get an ABC down to test this 0.382. That's going to actually be my primary look here on IWM. The bearish red, not my probable count. It's either down in 4. 4 could be in. I want to offer that as well. So if 4 is in, we're still within a 3 of 3. And that could go way beyond this 3.0 fib to target the gap fill all the way up towards 176. We get into ARKK. So we're looking at growth. So far on the month, it's a nice month. Into the weekly closed beneath the 8-week EMA. It had recovered that the previous week. So we're left right in that range again. And this has been a frustrating 2-month range. There have been some individual stocks that have had tradable moves. There's nothing here you can swing. Certainly Tesla's chart would look very similar to this. So if we're going to be bullish like IWM, we're going to know it. It's going to be incredibly bullish. We would follow through off this hammer strongly above 45. The breakout zone is actually 46. And then this move in the short term would be within a 3 of 3. Okay, so if Monday, if we are surprisingly bullish, then we've got to see that key breakout at that 46 pivot. It's got to move up, it's got to hold, and it's got to run. And that's what we have not seen. I'm going to offer here, really, I think the only possibility other than 2 simply working lower is that we get that bearish red. And so this one is maybe the one where it does kind of look like this could be a 1-2, 1-2 down. So we have to leave that possibility in just because of the range bound look on ARKK. Want to take a look at financials and industrials. This short term on DIA, was this all of wave 5? So that would be the count that would match that last spike on QQQ and SPY. And in that case, we'd be looking towards a gap fill early in the week. If we extend bullishly, so if this diagonal holds at 312, then we're looking up to the 315 pivot on DIA. For XLF, we had big banks make a huge recovery. Thursday, we had earnings misses. We had some earnings beats. Wells Fargo and Citibank put XLF up, and that is pretty crucial, but we didn't actually break the string of lower highs. So we've got to break the weekly highs and last week's high in order for us to say that XLF has set that bottom. Does this look like 5 waves up? It can count as 5 waves up. Can it extend? Certainly can. So let's keep a close eye again on XLF as we start the week. Those are our main ETFs. We get into our individual stocks, and we want to start out with Apple. Apple, nice week and a really nice day. So really 3 days this week that were really pretty good tradable days on Apple. It's healthy from its EMAs. Possible that it already set a wave 3. I think it's possible, but probably not likely, that I think that we'd be looking at Apple some extension up to try to grab that actual higher fib. Now, wave 4s, as you're going to notice from what I've charted here, wave 4s on Apple have sometimes been deeper and longer lasting than wave 2s. So it's possible that we get that wave 4 lower low. It could be a triangle. So we could be looking at wave 4 to continue on Monday if we don't see an immediate pop. But certainly on the high time frames, Apple's looking pretty good. So look at Amazon on the daily. And it made a stabbing attempt to try to recapture all of its daily EMAs, was batted down a little bit. into the end of the day. Where does that put it on the small time frame? So on the small time frame, I still have it working within a wave 3, but there's a really key invalidation level that's actually going to possibly give probability to bearish red. So within this 3, we cannot see a wave 4 trade within the high of 1. So if we lose 111.78 on Amazon, we've got some suspicion that this might not be the correct count. And as nested as it is, a 1-2, a 1-2, would we go with another 1-2? It's going to be kind of hard to convince me. So that means the selling in Amazon needs to be very shallow on Monday, if there is any. If it's significant, we're probably unfortunately looking for a poor market resolution. We get into, there's the small time frame, into Meta. Okay, so drag this over, and it looks a lot like growth stocks. It looks like Shop. It looks like Roku. It's not a clear trend off the bottom. If it's bullish, it's going to be nested 1-2, 1-2. You'll see that on the small time frame. Those kinds of nests, you've heard me say it, and you've seen it over and over, have simply not worked out. So the suggestion is, if it's correct, Meta and Big Tech is going to boom next week. Otherwise, this is probably a wave 4, 1, 2, 3 into a 4 and a 1-2 down. And that would be the count that would also match bearishly on Amazon. In the small time frames, this one's interesting. It did hold this diagonal, just like Q's at the close. So that's going to give you a little bit of hope that maybe this isn't a 1-2 with the 3 down. That structure, I think, is key. We're going to use these diagonals as price support. If there's weakness and it holds 163, we can give that nested bull a chance. But in a 3 of 3, it's really got to be enthusiastic. Let's keep looking. We've got Goog with the stock split, 20-to-1 split here coming up on Goog, and a daily doji. So not surprising that there would be an indecisive candle. It would count like Amazon and Facebook. If it's bullish, it's going to be really bullish. So we would be looking up to about here, well, let's see, 250, 2,500 divided by 200. So we're looking at about 120, 125 on the split as the target. That would be for wave 3. But, we just have to wait and see what's going to happen. Recent stock splits have not gone well. So we've got Amazon and Shop that did not respond well after the split. I'd like the potential of the nested setup, but I just was not willing to trade it long. Maybe a flagging look, but if we get some good market resolution, I think this is one that you got to put on your buy list. Head of the weekend, it just wasn't going to do it for me. Okay, Microsoft, a little bit of relative weakness, and I shouldn't say a little bit, actually a lot of it. Microsoft barely held a yearly higher low. So if there is a name in big tech for you to be very concerned about, it is this one. And you're going to notice today a diagonal rejection, an EMA rejection. The markets are not going to go anywhere unless Microsoft participates. So this could be a bearish 1-2. And if it is, I think we're going to look back and say that Microsoft was leading down. Here's your 1 down. And unfortunately, this wave down looks impulsive. So 1, 2, 3, 4, 5 down, possibly with the wave 2. So I mentioned that I'm giving bearish red less possibility, but I'm not giving less possibility to selling off early in the week because I think this would be an A, B, C down. So let me add that label here to Microsoft. So if its relative weakness continues, get rid of that magnet, that this would be A, this would be B, this would be C, and let's change that to blue. All right, so I think there's a lot of excitement to look ahead for us on Monday, but unfortunately here I don't offer you a high probability All I can offer is we got possible paths, but we do have some very, very clear things for us to look at going into the week. We shouldn't skip Tesla. So we get Tesla in on the weekly. And we can see here, it's still beneath that key 760 pivot. And how many weeks has it tried to break out? 1, 2, 3, 4, 5, 6, 7. 7 weeks it's tried to break out. And I think the next move is going to be big. Either this rejection is going to punch it like Microsoft to new yearly lows, or it's going to recapture. It's going to break the early June high. And at that point, Tesla could run. So bears are saying that all this is just sideways wave 4. You would see that right there on the daily, that this is a 1, 2, 3, and then a triangle or failed zigzag 4 with the 1, 2 down. And we certainly have to entertain that possibility on the small time frame. But notice it's just kind of poised for a potential big breakout. So if this diagonal can break along with the EMAs, and really all it's going to take is a break of the daily high, then I think you got to get long Tesla. We're probably looking at some really healthy general market resolution. Now, for the short-term count, like Amazon, very clear invalidation level. So we cannot have price trade into the high of wave 1. So if 706.29 breaks, we have to give those bearish counts some credit. We need to see Tesla strongly breaking out in this nested count. And because since this, really in growth stocks for about 15 months, certainly since the start of the year, these nested counts have not followed through. I cannot give you an extremely high probability on it, but if it happens, we're going to know it. The market's going to tell us if that's the way that it's going to break. Okay, let's keep looking at some individual stocks. Let's look at some growth stocks. So if ARKK is going to break out, we have to have nested counts and growth names. We've got one in Square, potential hammer candle, and it's within a 3 of 3. So this is one that I certainly want to have on my list. It has some diagonal resistance above it, but if it can break above 68, test it, we could see a big run into the mid-70s on Square. ROKU had a nice recovery today, so a possible 1 expanded flat 2, and then it's working upwards. It's not the most developed count. That's why I would prefer to trade something like Square as opposed to something like ROKU. We could look at Zoom. Zoom is now quite a significant component of ARKK, and it set a lower low today. So I can't immediately get excited about Zoom from a trading standpoint, but when you look at its position on the daily charts, it's interesting. I would say a little concerning, because from what's potential of minor 1 high, it just lost over the last 2 weeks all of its MAs. Now, bulls are going to say, well, that's just an inverse head and shoulder. There's a clear neckline at 124, and that's what we're targeting. So if you are a position swing trader of equity, this is your breakout level. And this type of setup is one of the most powerful trend-changing setups, but we got a long ways to get there. So I'm not going to try to bottom pick this, even though it's at a 0.618 fib. If you want to swing this in a long portfolio, it's got to break this neckline, test it, and then we're looking to potentially move up off of a primary low. Okay, other individual stocks, we certainly want to look at semis. And semis last week, they set their yearly lows. Is that a hammer? Is that a hanging man? We're going to find out. Nvidia was good to play this week. I like the close above the daily volume POC. Where are we at in the small time frames? So it did finish with the daily closing high. Is that all of 3? Well, here's what we know. We can't have this 3 within a bigger degree 3 trade within the high of minute 1. So if we lose this high, 153.76, then something else is going on in the count. And I would offer that it's possible that this is that same expanded flat. So an A to a B down to a C, as long as wave 4 doesn't trade into the high of wave 1. So lots to look at here on Nvidia. It did not get the July 11 gap fill, so it could have a little bit of more work to do, and that would be the extension count that it's going to move up into those fibs. Similar look on AMD. So nothing yet on the weekly that's going to show that we're poised for a huge breakout, a healthy uptrending look to finish the week. Now, this is the one in the small time frame. It's hard for me to get too excited about this. This looks like a 5-wave up into minor 1. We're choppy down into a 2. It's this look. Really, since Tuesday, I'm having a hard time finding a clear 5 waves. This could be a leading diagonal into a 1, into a 2. I don't like to give truncation, and so it's possible that minor 2 actually truncated here as a double zigzag. And if that's the case, this is a 1, 2. We're looking for a 3, but we do not want price to trade into this high. So if price trades into 79, then we're probably going to be looking for something deeper within this minute 2 count. Okay, Boeing, one that I've traded pretty successfully since getting it on the radar a while back, and it had a pivot and an MA recapture this week. A nice week for Boeing. Now onto the daily. This is a little bit choppy, and Boeing does this during the move off the COVID lows. It's pretty choppy a lot of times, so I'm not so concerned, but it's got to get back within this channel. So it's got to get back in the 150s, and on the small time frame, in order for it to do that, I think it put in a wave 4 on this candle. That was a nasty set of candles. It shook me out of calls here, and I didn't profit as much as I thought I was going to be able to get out of it. If we're into the ABCs for wave 4, we're going to be seeing Boeing tumble and probably challenge Friday's lows early in the week. If it's bullish, the bullish count's also there. It's going to be a 1, 2, 1, 2. So let's look to Boeing, because this is a really nice tradable name for holding this range, about 146.50 to breaking this swing high above 148. That might give us a move back into the 150s. Okay, that's all the individual stocks there. We'll move on to our last sector, and I want to show you the higher time frames here. This is not a great bottoming candle for GLD. It doesn't look like this green recovery candle from March 2021 or this hammer. I kind of am leaning towards gold needs a spiking wick. Maybe it needs to connect with its 200-week SMA and then recover that 158 pivot. It could put in a surprise, but there's really nothing too exciting about this off the bottom. We've got a marking the yearly low, and then we've got an inside day. Inside days, you can play the break. This, to me, is not enthusiastically bullish. I've got that bounce count here, but it wouldn't surprise me if this is actually a 1, 2, 3, 4 and setting up for another move down. And that weekly SMA target for next week would be about 155. Okay, SLV looks even worse because we just got this week an 8 EMA bear cross of the 200. And this is just, it's really a sickening look. We're now well below the 2019 and 2020 highs. And unfortunately, there's no signs of bottoming. So you just can't have money in the sector right now. The daily, is that a bottoming candle? It looks just like the rest of these downtrending ones. And so it's unfortunate to say it because you would think that metals in this inflationary and maybe questionable currency environment would be getting a huge bid. They're not. And price does all the talking. So right now, I can't see any reason to try to be in these miners. This also right here to me in the small time frames doesn't look impulsive. So I would not be surprised to see metals and miners make a new low next week. Okay, we get into XLE. And certainly energy is interesting because we got a potential hammer look off of the 50-week SMA. But notice this potentially broken diagonal. It just tested it. So I am leaving my bearish counts in place. And if this is correct, we have a nested set of 1s and 2s down. Now, again, I just didn't have the guts to hold anything over the weekend. But if we get a gap down move, I think within this count, I think you got to play it. There is an invalidation level here as well. We can't have this 4 trade into the price of this 1, and that's at 69.96. So if we see energy move up, it actually looks like 1, 2, 3, 4, 5. That is not a bearish correction. That would possibly be a bullish impulse. And then if it trades into that 1, this count is incorrect, and your short thesis is off. So I think something there for us to look at. My primary look here is short, but we've got to keep those invalidation levels in mind. Let's look to crypto. So crypto, some attempts to break this key pivot, and that's turned into a pretty key, roughly month-long pivot. If this is a holding move over the weekend, we're going to see crypto get a bid. And that's going to be our leading indicator that risk assets are ready to run. Otherwise, this is within 4, a 1-2 down. And on the daily, we're going to be looking for 1-2 down all the way sub 16,000 for a new yearly low. It is pretty encouraging that we've got to look at a potential channel break. So right now, based on the look of that daily candle, before the rest of the weekend finishes, we're going to be giving here the weight of evidence approach to the bulls. So there is enough stacking up here on the bullish side that we could see some extension. You saw it with some individual stocks. If we get it here on SPY, that diagonal is going to hold. We're not going to lose it. Or if we just wick through it, it recovers. And then we've got on SPY 390 and then all the way back into the June 28 highs as a potential target for 1. So I think we've got lots of really good stuff for us to look at. I think we're pretty clear on where we're at. Are we going to get extension? We'll play it long. Is this an expanded flat 4? Then we're going to know that we're either going to avoid it, we're going to look for fibs and then try to get long, or do we see an impulse down into an ABC? That's our 2. As I said at the outset, the only way bearish red gains probability is really with a massive gap down and trending move. Okay, so as always, we project, we monitor, we adjust. I can't give you certainty on anything, but I certainly give you levels. I certainly give you structure. I give you pattern to work with. That's exactly what we're going to do when we come back at it Monday. So wish you all a really, really good weekend. Take care of yourselves and take care of your families. And let's get right back in the saddle Monday pre-market and see if we can roll out another set of green days.